I'm Brett Villaume. I'm a board member of the Market Technicians Association, and I'm pleased to be interviewing today Simon Culhane, who is the CEO of the Chartered Institute for Securities and Investment, or the CAIA from London, England. Welcome, Simon.
Thank you.
Simon, please share with us your sort of your resume briefly, and also tell us a little bit about CAIA.
Thanks. Well, I started life as a banker. So I was a retail banker, and then I worked in the States, in Chicago for a few years, great city. And then I worked for Deutsche Bank and also the central government. Okay. But for the last 10, 12 years, I've been working with the CAIA, which is the Chartered Institute for Securities and Investment. And that really looks after people working in the securities industry, the investment industry, the wealth and financial planning area, and not just people who work in the front office customer side, but also those who work in the operations side, including compliance. Okay. So really anybody that works in that capital market space.
If you're an American and you're somewhat ignorant of the CAIA, is it comparable to a FINRA?
A lot of similarities. FINRA is a state regulator. We will have our own regulator, but we provide the qualifications that are effectively authorized by the regulator. So I think it'll be very similar to FINRA, but we have less powers than FINRA does. Okay.
Well, you just gave an excellent presentation on integrity in the workplace, and I wanted to ask you about the definition of professionalism, because this was an integrity and ethics presentation for professionals. How do you define professionalism?
We would define a professional, someone who is a professional, whether they are an accountant, a lawyer, a teacher, market technician. They are someone who has the appropriate knowledge, the appropriate skills, and the appropriate behavior. It's the combination of knowledge, skills, and behavior that make a professional person. And when we say behavior, what that also means is they're looking after the stakeholders, plural. They're not just looking after the firm or themselves, very much for the long-term interest, and often, if not always, putting the customer first. So those three attributes is what a professional person is. And you think, if you go to a doctor, particularly a good example, a doctor, a lawyer, it's client-focused. That's what they're trying to do, the best for the client, solve the client's problems, solve the patient's problems. And that is what a professional person does. So, knowledge, skills, and behavior.
And those professional people must act with integrity.
That's a key part of it, and integrity is an interesting discussion, because everybody says, oh yeah, we've got to have integrity, I have integrity. And then we say, well, what do you mean by integrity? What are the component parts of integrity? And we think you can break integrity down into 4 key points. You can have a big discussion with the Aristotle and others for years, but I think you could do it in 20 seconds. Integrity is somebody or action which is honest, open, transparent, and fair. And of those, actually fairness is a really strong part. If you think, you just think what you feel is if you're waiting in line for some food, or you're waiting in line to buy a ticket, or you're waiting in line in a traffic, and somebody jumps in front of you, do you say, oh, go ahead, or do you say, hold on a minute, I've waited, you wait. Fairness is a large part of our society. We want fairness. And at the moment we are seeing a lot of noise, particularly in Europe, about people paying fair taxes. A lot of multinationals are now not paying their taxes. Google, Amazon are really, and Starbucks and Co. are absolutely in the European sites. And now they're voluntarily paying taxes, because they realize if they lose the trust of the customers, they lose business, and that's the bottom line.
That's right. That brings up a great point. We could talk about the ethics of it for fun and the integrity of an individual, because one wants to act with integrity. But truly, there's an expensive cost to corporations due to bad behavior.
There's a very, very well documented cases, particularly in Europe, but also actually in the US, of where the fines paid by banks particularly for bad behavior far outweighs the benefit they got at the time. And this is a case about also short-term and long-term. And that's why I think we've seen over the last decade quite a change, but I don't think we've gone far enough yet into, particularly in the US actually, into the compensation structure. How do you reward people? How do you pay them? In Europe, essentially multiple big bonuses have really gone. So it will be unusual to pay somebody more than 70%, 80% of their annual income. That would be at the top end. And that will be tied up over 5 years, and in fact, in some cases, 10, 15 years, and not paid in cash. And in the US, you still got people being paid large sums of money, multiples of their salary, quite small salary, but multiples of it for success.
That's right.
And that and that pushes the envelope. That can make people go a little bit further than they really want to, because the difference between making that target and not is significant.
Well, thank you, Simon. I think I can speak for the organization and say that we're really happy that you attended and presented today. So thanks again.
Thank you.